Asia, which is definitely starting off well. So we're seeing gains across the board there.
Axis Bank has reported earnings and their business profile much better than expectation.
Well, for Tech Mahindra, the miss is on margins. So the top line revenue growth has come in at 0.3%.
There is a drop in margins, but to me it is all temporary.
First rate on the Nifty is at a level of 17,950.
Certainly helps me achieve the dream of unbundling and demerging the companies.
My 30-40 years career, this is the best banking system across, like whether it is the private and public.
Once again, we have ourselves a very flat day.
Guiding between 12 and 14% growth on our top line.
Since the date of notification of the scheme, we are still we don't have clarity on the way forward.
We are firing on all cylinders, and I do believe we can achieve this.
Well, it is turning out to be a session where there is a slow and steady gain which is taking place.
Well, that was the day so far. Hello and welcome to a fresh new edition of Closing Bell. We are coming to you from the CNBC-TV18 Motherwell Oswald studios. And we've got the Bazaar team back. I'm Prashant, with me, my colleagues Reema and Nigel. Guys, hi.
Hi, counting down to the Friday.
Yeah.
What plans? After 5 p.m? Because we're all going to be here till 5 p.m. So what about after? It's a long weekend, guys.
Well, I'll be here till 5.
I gave you a suggestion, right? That Tony Selvam movie, PS2. And you said it's interesting.
I saw the first part. There were two, there was only one. But the first one, I saw one. It was very interesting. So I probably will catch it in the movie hall. But it's a Monday is a holiday, right, Nigel?
Yeah.
As you've been reminding us. And Nigel has been reminding us that after Monday, there are no long weekends for a long time as well.
Sure. When's the next one?
There's no long... In June 20th, we have one holiday. So we have a long run before we get a holiday, first of all. And then after that, I think it's a distance away. So 2 months, no long weekend. So enjoy this one. Relish it.
All right, well, let's quickly take a look at what the market is doing before we go any further. The Nifty is basically almost at 18,000 levels. I don't want to jinx it, but, and it's happened before, you get very close to an important level and then, it's touch and go. But the overall sort of move is very broad-based. I looked at what's leading to this 50-60 point move on the Nifty. It's not really any one stock or one sector, so it's not concentrated or narrow in that sense. It's pretty broad-based. 18,100, I would imagine, is the next natural kind of target. It's the 61.8% retracement of the entire fall from the all-time highs. Mid-caps and small-caps are the real stars in trade, 0.6, 0.8% odd gains. And for the week, that's 3 and 2% gains respectively for the small and the mid-cap part of the market. So pretty good. Now, globally as well, earnings, etc. are coming through. All that is fine. Monday is a holiday. And the next Wednesday, we get the Fed decision. So, we perhaps will see another 25 basis point hike. Will it be consequential in a big way for the market is the question. There are already those here on the sell side. CLSA, for example, put out a note saying that, well, if they do indicate that this is the last hike, last 25 basis point hike, I mean, that actually is a relief more than anything else. So opinions vary. We don't know what the Fed will do. Most likely it's a 25. But what the accompanying statement is going to be like, etc., will be important. That's the only big one that I can kind of see from here all the way to next week. Of course, unless and until some big earnings comes and royal sentiment, that's another thing. But otherwise, I mean, we seem to be pretty set. Reema.
Well, since I'm counting down to the weekend, let me quickly take stock of how this week has been. And not bad. The Nifty and the mid-cap index have rallied close to about 2% for the week. In terms of the big sectoral movers, PSU banking index has seen a rally of 6.5%. And surprise, surprise, IT makes it to that list as well with a near 3.5% up move in terms of gains so far this week. So despite largely disappointing earnings, because your best case was stable earnings, right? Not a miss was your best case. But still, the Nifty IT index is up close to about 3.5%. In terms of individual names and the big movers for the week, many FMCG names. So Tata Consumer, where the numbers look good, has seen a rally of 9% for the week. Nestle India as well, strong numbers. The stock is up close to about 5%. Britannia as well has seen a gain of close to about 4.5%. In the IT pack, it's Wipro, which is looking good for the week. And L&T is another one in the large cap space, 6% move for the week.
Well, that's right. Guys, I just look at the Nifty. So it's We're holding closer to around the 18,000 odd mark. The problem today is the Nifty Bank. That's not performed at all. You know, the Nifty Bank has just moved into the green now. So let's see whether or not we can get there. The good news, though, is that the Nifty currently, as we speak, in these last 5 minutes, we move back towards the top of the day. Remember, the high of the day is around 17,990 odd, and we are back at the top of the day. So let's see whether or not we can get past this hump. For the time being, the position is such that you continue to stay long. That 100 DMA, that comes in around 17,815 odd. You know, so that's the important support zone. On the upside, I'm expecting resistance at around 18,050, 18,100 odd. So good to see that with just 55 minutes to go for the trading session, we're holding towards the high point of the day. The Nifty Bank has taken a break. Is it a break? And will it resume its up move? That's going to be the driving force for the index itself. But how do you position yourself in the final hour trade? That's going to be rather important getting into this long weekend. Mitesh Thakkar is back with us to tell us exactly that. Hi, Mitesh. Good afternoon. Thanks so much for joining in. Well, could you tell us what would your strategy be? Now, if you had a long position, you'll be dancing your way to the bank, you know, closer to around 18,000 odd mark. Given that you have, you know, some nervousness on the monsoons, you have a big Fed meet coming up, you have earnings season as well. Do you advise to take some money off the table, or do you say trail your stop loss and continue to remain long?
Nigel, I think, you know, we already advised that around 17,850 marks. So I think whatever people are holding, I think they should hold on and trail the stop losses. The next spot of, supply could be closer to about 18,020 odd levels. But I think eventually this rally is showing enough strength and the indicators are poised nicely to suggest that we might actually get to about 18,150, 170 zone. With that kind of a view, I think a good idea would be to keep trading the stop losses. And I would suggest now a stop loss at about 17,925 on this spot, or maybe 3-4 points below that. I think, you know, maintain and hold your long positions. On the stock side, what is possibly, you know, looking very interesting is IEX, which is, after that big breakout, it went into a few days of consolidation and has started moving up again. So that's a buy with a stop at about 153.5 for targets of 165. And the other one which I like is Dr. Lal Path Lab. That's picking up as well. It's a buy with a stop just below levels of 1924 and a target of around 1980 is what I would recommend.
Okay, all right. Thanks a lot for that, Mitesh. Well, let's focus on a couple of earnings then. The Nifty Bank is underperforming. And one such outperformer actually is one of the biggest underperformers from the banking space. CSB Bank, the stock is down more than 5% in trade after posting numbers a little while back. The problem is on the margins. Abhishek joins us to run us through why the street is disappointed with these set of numbers. Abhishek.
Well, Nigel, the strong loan growth that they have had about 11 to 12% on a sequential basis, that has not translated into net interest margin sustained at healthy levels. And it has declined on a sequential basis by about 40-50 basis points, which has not gone down well with the street. And if you talk about the asset quality, the slippages have increased on a sequential basis to 35 crore. That is up about 35% on a sequential basis. However, asset quality has improved. Gross NPA ratio is down to 1.26 versus 1.45. Net NPA ratio is down to 0.35 versus 0.42. In terms of PNL, the NII is down about 0.4% sequentially. If you take a look at the breakup, the interest expense that has gone up by 18.9% sequentially, despite the fact that, you know, deposit growth is lower than the advances growth. CASA ratio has improved. The increase in incremental cost of funds is pretty high for CSB Bank. So net interest margin has declined to 5.38% versus 5.8% in the previous quarter. The cost to income ratio, that's also sequentially has seen a jump, 57.5% versus 56% sequentially. So the PAT is up about 19.6% YOY, but up just 0.25% on a sequential basis. So the ability to not translate into meaningful NIM of the strong loan growth that they have had has not gone down well with the street.
Okay, Abhishek, thank you very much for that. That CSB Bank, in terms of the numbers and the reaction. By the way, look at LIC. The announcement and the flashes came up on your screen. So we have Siddhartha Mohanty, who's been basically appointed as the head of LIC for 2 years. So his term now will run till June of 2025. The stock's also seen a bit of a perk up. This is what is coming through. His term was till June of 2024, and I think his term has been given an extension beyond that as well. So that is the news which is coming through on the largest insurer in the space. So continuity at LIC for some more time with the current management continuing. Prakash Diwan is now joining in to take some questions on the market. Prakash, good to have you with us here. Good afternoon. CSB Bank, let's just begin there. You just heard Abhishek outlining the numbers. 40% gold book on an overall basis. Growth has been generally good, but of course there are problems as on the margin front. How would you look at this name?
Good afternoon, Prashant. So, we spoke about this even last quarter. There's a lot of expectation that's built up because this was one bank that came from absolutely out of the blue, got into the gold loan portfolio, started competing with the gold NBFCs in a very aggressive way in their own, territories of sorts. But the kind of scorching pace at which they had to grow to keep expectations in line was, to keep in line with expectations rather, is something which was, likely to kind of, impact margins. I mean, you can't grow a book so rapidly, especially in the face of stiff competition in a market where, interest rates are going up and hence, demand is always going to be a little bit inelastic in that sense. But what's worked for them, is the fact that this was something they set out as targets. I mean, if the street actually understands that this is something as part of the strategy where you grow the book and then focus on margins and cross-selling and upselling to the same customers, things could change. But at this point in time, I think the phase in which they are, given the new ownership and the new management, focus that they've articulated, it is going to be a bit of a dampener for people because expectations were too high. So, don't expect growth which comes at great margins all the time. But I think this could ease out in the next quarter or two. It's not something which is a very major cause of worry for long-term investors. But yes, for the tactical short-term investors who've invested, let's say, in the last year or so, it could definitely be a disappointment, especially coming at the fag end of the year. This quarter should have been much better.
Prakash, hi. I wanted to get your thoughts in on PI Industries. But before that, let me go across to my colleague Ekta. And she's going to be telling us about PI Industries' plans to acquire two pharma companies of the US-based Therachem Research. Ekta, take it away.
Thanks for that. Well, yes, the company is going to be acquiring two acquisitions, which is going to help them make inroads into the pharmaceutical space. This will be funded via cash as well as their recent QIP proceeds. Now, the first company is that they are acquiring Therachem Research Medilab for $50 million. There's an additional $25 million in terms of performance-linked payout in the next 6 years. It provides services in preclinical and clinical stages, consolidated revenue $33 million for FY22 and EBITDA positive as well. The company is also acquiring an Italy-based small molecule and API manufacturer as well as a CDMO manufacturer for 34.2 million euros. Again, it is making around $45 million in terms of revenue in CY22 and EBITDA positive. Impact is that it is going to be positive. It is expected to be earnings accretive as per the management, and it will help them build a differentiated CDMO offering across the value chain. Now, Nuvama is positive. They've said that, it is a lucrative deal. Implied EV to EBITDA is at around 4.2 times. They've upgraded the stock to buy from hold. Investec has a buy target price of 3,800. EBITDA margins are tad lower, but it should add another growth avenue plus help diversify revenue. Axis Cap valuations look reasonable prima facie at around 4 to 5 times CY22 EBITDA. So it's been given a thumbs up across the board from brokerages and looks like a good deal for them.
Well, indeed, Ekta, thanks a lot for that. We had a couple of deals announced this week, right? And this markets gave their verdict on both of them, whether it was Godrej and Raymond. The street believed that maybe, in fact, Godrej paid too much for it, and that's why the stock has pulled back a good 100 rupees, actually, from the time we came to know about this deal. And the other one as well, Ipca and Unichem. When there's a marriage, always there is some kind of opinion that comes in. And it seems that everyone was not on the same page, but at least for PI Industries, they're acquiring two unlisted players. PI Industries up 10%. Yeah. So it looks like it's the proper,
distant relatives called analysts.
Indeed. Prakash, what do you make of this one? PI Industries, Mr. Singhal, when he comes on the show, we keep asking him, what are you going to do with that money in your books? He said, I'm looking seriously. And he's announced it, and the street likes it. Stock locked. 10% higher.
No, absolutely.
Your view on the stock?
Absolutely, Nigel. The way you said it, it covers everything. It's a marriage that makes a lot of sense. It's so clearly win-win that you really don't need to second guess in terms of why the management is paying what it is paying. The inspiration is for such companies which are generating so much of cash. There is going to be a little bit of a plateauing in terms of their core chemical business related to whichever segment, whether it's insecticide, whether it's industrial chemicals. There is a plateauing that's evident, and we've seen that in the biggest of names. Let's say Aarti. I mean, the reason they did this similar thing of demerging their pharma activity into a separate spin-off and an entity which could grow faster was the same logic was evident out there a couple of years back. Now, PI Industries bought into something which is going to be both of them are going, businesses that are running. They are EPS accretive. In fact, the Archimica business, the Italian business, is available at, they bought it at a valuation which is fairly attractive, I must say, given the peer group in Europe and all. And what it helps do is it straight away gets them into the value chain and kind of learn along the way to be able to expand into other markets using these base. There is a lot of regulatory advantage that they get acquiring, existing businesses with all those the network effects of the regulatory approvals that these businesses carry on the books. So I think it's no wonder the market likes it. You had cash sitting on the books. You couldn't have put it more into expansion in the core business beyond a point. And this is something which catapults you into a very different revenue stream, which is also fairly large. So I think it will make sense. I wouldn't be surprised if you hear similar acquisitions down the line from a company like this as they generate cash and start, getting the success rate improved by these acquisitions. They will learn, they will digest this and probably grow more inorganically at a faster pace.
By the way, the Nifty is now taken out levels of 18,000, and this has happened for the first time since the 20th of February. The Nifty and the Sensex continue to march higher and higher, and now it's a 0.5 percentage point gain on the benchmark indices. Look at that spike in the last 10 minutes. Get into a break. We'll continue our conversation with Prakash. We'll also invite Ajay Vora from Nuvama Asset Management on the other side.
Welcome back. Well, 18,018 is here, so great news there for the bulls. The Nifty banked as well from trading in the red. That's moved into the green, and now it's up closer around 60 points or thereabouts. But there are a couple of stocks that are doing very, very well. And the Glen twins, that's Glenmark Pharma and Glenmark Life Sciences. Both of them are surging in trade. Ekta joins us for a quick analysis on what's aiding the rally. Ekta?
Thanks for that. Well, yes, Glenmark Life is really reacting to its numbers. Revenue is up 21%, margins 33%, profit of around 146.3 crores, which is a growth of 48% year on year. Generic API segment did well. It was a growth of 15% year on year. The CDMO segment did well. It was up 30% on a year on year basis. The company is quite bullish about FY24. They are guiding for 12 to 14% revenue growth. They expect FY24 margins to be in a range of around 30 to 31% as well. Now, Glenmark Pharma, remember that Glenmark Pharma is basically the majority stakeholder in Glenmark Life, and they do have some business that they provide Glenmark Life, which had seen some amount of volatility a couple of quarters back, but it has improved. It was up 25% on a year-on-year basis. This is basically business from Glenmark Pharma to Glenmark Life, and it was up 45% on a Q-on-Q basis. The other key point to watch out for is that there is a need to dilute the stake in Glenmark Life for Glenmark Pharma. They hold over 80-odd%. They're supposed to bring it down to 75% by August of next year. And the company has said that the process is on. Stock-wise performance, Glenmark Life is close to its 52-week high. Glenmark Pharma is close to its 52-week high as well, trading at around 14 times FY24 PE. So it seems as though the street seems to be bullish both on the API arm, which has picked up pace this quarter, as well as Glenmark Pharma, which is now at a fresh 52-week high.
Prakash, any thoughts on Glenmark Life? Strong Q4, the guidance is healthy. Plus, once the promoters bring down their stake in Glenmark Life, you will have more investors coming in. In that context, is Glenmark Life a stock that you like? And any thoughts on Glenmark itself, the parent company, at a fresh 52-week high now?
Yes, so I think it's the GLS Glenmark Life Sciences which is the trigger, and the parent company probably getting a significant rub off from the holding that it has, and if it were to dilute at this point, it actually rakes in a lot of moolah. What has changed for the business, both these businesses, is the focus that it has got. In the last, I think 6 months back, they had an investor day where they actually clarified how these two companies are positioned relative to each other and what's the kind of focus going forward, what's the kind of energies that they're investing into. The numbers actually tell you that the API business is something which they started investing into about 2.5 years back, but it's only after the demerger that the focus has started coming back on the ROE levels as well. So that's where, the numbers start getting sharper. And I think that will continue because it's just a start, Rima. It's not something which is a one-off. It's a trend that will be deep-seated. My expectation is that GLS will continue to grow at a faster pace than what we've seen in the last 6-12 months. And that's going to definitely be rewarding to investors who buy into it directly. If you were to buy Glenmark Pharma, it comes with its own share of volatility or uncertainties, given the product issues that you could have in the US market particularly. So you have to be a bit watchful about that. But GLS is where, there's a huge space for growth for them and headroom for growth. And they've done it in the last 6 months as they committed. So that's a confidence that comes to the management guidance as well.
Prakash, thanks very much. Good speaking with you. By the way, the other pharma name is Loris, which is up about 5%. It's not as if the numbers are great. The guidance, you can... point is the guidance over the last couple of years actually has not been met. There have been constant disappointments, but the fact also is that the stock is now a fraction of what it was at the highs. So there is a little bit of buying which seems to be coming in. Shriram Finance is the other name. It's down heavily, 5-6% the last I checked. They also reported numbers. We had the management with us earlier on. Disbursement growth, etc. is okay, but on the earnings front, they were sharply below expectations. Abhishek is here to tell us why. Abhishek.
Well, Prashant, as you put it out, the business momentum was good. However, the P&L was weak on account of various upfront expenses that they have taken. So, disbursements are up 6.2% quarter-on-quarter. AUM growth is pretty healthy at 16% YOY and about 4.5% sequentially. Asset quality has improved. Gross NPA ratio is down about 8 basis points on a quarter-on-quarter basis. However, the net interest income, that's not seen the translation from the strong business momentum. So, that's up only 0.4% sequentially. The OPEX or the operating expenses, that's up 21% quarter-on-quarter. They have taken one-time amortization expense of 300 crore in this quarter itself. However, it was to be amortized over every quarter of 75 crore. So going forward, they'll have this amortization expense of 75 crore per quarter. Provisions are up 29.2% quarter-on-quarter. They have a one-off expense of 295 crore. They had done an internal audit which asked them to, increase their provision coverage, which is why this one-time expenses was taken into account this time around. Net interest margin has remained stable at 8.55% when compared to 8.52% in the previous quarter. However, the PAT on account of these one-offs is down more than 26% on a sequential basis. Back to you.
Okay, all right. Thanks a lot for that, Abhishek. Well, Prakash, that's Prakash. What do you make of this one, Shriram Finance? I mean, we had the management earlier today, but 5% lower. Would you look to buy into this dip?
Absolutely, absolutely. I think this is very clearly a one-off. This is more situational than something which is going to impact the company on a regular basis. I mean, it's like Axis Bank taking the entire City acquisition on the P&L, and optically it looks like so negative. But you have to understand that these are businesses that have built such strong franchise that when expansion happens, in that space, they're the ones that lead that growth. Whether it's a Chola, whether it's a Shriram, you match it with the commentary that you hear from things like Ashok Leyland, people like Ashok Leyland on the CV cycle, or some of the smaller banks that have been reporting a lot of MSME growth. There's no reason why these people cannot leverage on that environment, Nigel. And remember, the cost of funding issue post the tax regulations changing on debt funds was likely to impact some of these NBFCs, but not the ones which are able to place their paper directly to a lot of other buyers and other institutional investors. So when that comes, that becomes a good advantage for them to get back into that margin growth game, which right now seems to be got impacted. But I think it's clearly something which is very temporary, and you don't get these kind of chances too often in a business that's growing and which is healthy enough.
Okay, Prakash, thanks for staying on a little longer. Appreciate you joining us with that perspective, and have a good weekend. And I will see you back soon again. Ajay Vora is head of listed equity alternates at Nuvama Asset Management, and he's joining us now to talk about markets. Ajay, I think we can safely now describe this as a bit of a melt-up which is happening, right? Yeah. Will this continue is the question, and does it have legs according to you?
So hi, good afternoon, Prashant, and thanks for having me. So I think if you remember last time when I was on your show, maybe somewhere around 17,000 odd levels, we were pretty positive, and all the technical and the fundamental factors was supporting for this kind of a rally. And I think this still has some steam left, both again based on fundamentals and technicals. Because if you look at it, most of the earnings so far, except the IT sector, has been fairly strong. And most importantly, if you see the FI inflow has still not picked up in a very big way. Most importantly, technically also, if you look at it, large part of the FI short is out of the system. So right from the highs of 18,000 crore odd, they are closer to 2,000 crore. But at the same time, the HNI positioning has also been completely liquidated. So the market is fairly light. That is what I just want to explain. On the positioning side, as well as if you look at the fundamental results from the banking sector and a couple of other sectors also, we have seen reasonable upgrades. I think this can rally a few percentage points from here on as well.
Only a few percentage points, Ajay. I thought you were going to say we're going to be dancing away to the bank. You believe we've got limited upside, looks like. Then
if you have to go to our all-time high levels, it's still 5%, which classifies in the few percentage points, right?
Ajay, you've got some support here.
It's just that, lifetime high sounds a lot better than a few percentage points.
Yeah, that's right. Okay, Ajay, let's leave the headline index aside. I think, when you joined us last time, if I remember, you were also talking about Pharma, right? As one of the sectors that we're looking at. Now, that's done pretty well. But does it have enough steam to move higher from here as well? Because we had a big IPO, so maybe you normally see excitement in that space. Still, some numbers are quite disappointing. Out of the woods, would you continue to buy into Pharma, or it's done?
So, Nigel, Pharma has always been a very much stock-specific story. It's not like, the banking sector does well, all the banks generally do well. Pharma is not of that kind. And therefore, when we discuss Pharma, we were very positive on selective names. And in fact, they have done reasonably well over last, I would say, 1 or 3 months.
Ajay, if you could name a few, please, for the benefit of our viewers.
So if you look at something like, Glenmark Pharma, the stock has rallied almost 40% from the lows over last 3 months. And, a similar name in API also, that name has also done significantly well. So it has always been a stock-specific story, and we were pretty convinced about the valuation, about the business being intact, and whatever the company was doing over last maybe 6 months or so, that gave us a lot of confidence. So basis that, we were pretty positive on this whole space. And in fact, barring a couple of names, most of the other companies have done reasonably well.
What about banks? You've been bullish on banks for a long time now. Numbers are looking good. But are you okay to buy at current levels after the outperformance? Names like an Axis Bank, ICICI Bank, HDFC Bank.
So I think we are still very positive on the private sector banks, especially say ICICI Bank and HDFC Bank. Both have been reporting fairly strong numbers, and I think the runway is still there from here on as well. If you look at the overall economy also, barring a couple of pockets on the consumer discretionary side, I think we are doing pretty fine. And the credit growth, maybe it was a bit at elevated levels around 17-18% earlier. Maybe it will be closer to 13-14%. But considering, the whole growth story which is ahead of us for all these private sector banks, and valuation, again, I would say it's not that expensive. It is closer to mean or maybe slightly above mean. I would still stay very constructive on the overall private sector banks.
Overall constructive on private sector banks. Ajay, the way broader markets and mid caps, etc., are moving, right? It's so varied. I mean, it's not as if there is one sector which is moving up. It is not FMCG, or it is not pharma, or it is not, all the banks which are doing well. Is it very discerning what we are seeing out there right now, or this is some kind of a liquidity pushing up a lot of things? And by the way, it's volume led. It's not as if there is volumes which is lacking.
So that's a fairly good point, Prashant. So if you look at it, I was just about to, talk about the same thing. The action is largely on the mid and the small cap side. And I think, again, if you clearly remember in March end, at that time, the liquidity played a big role in the way the stocks were hammered. And most of the names were down almost 30-40% over a 2-month period. And in fact, if you look at, the businesses were fairly strong. Just to, if you look at a couple of sectors where, railway ordering was huge, or on the capital goods side, the order inflow was pretty significant. All those names were also down almost 30-40%. So my sense is that, that liquidation happened somewhere in end of March. And for the current month, if you see, most of the names are again up around 20-30%. And in fact, if you keep aside the whole consumer discretionary side where you are seeing reasonable slowdown, barring that, there are a lot of other businesses where I personally feel that, the leadership is being taken in a couple of, pockets. And those names are doing fairly good. So my sense is that the older sectors on the mid and small cap, which took leadership, may not do that great going forward. And you'll see some completely new pockets emerging. And we can see significant outperformance over there.
Even in your note, Ajay, you're mentioning that the shorts, actually, a lot of short covering has already taken place. So now the way the markets are moving up, it's smelling of maybe, in fact, big cash market flows. So maybe the institutions there on the buy side, let's see what that data throws up. But 120 points higher, and we've been building onto those gains. So that's good news. Ajay, you're talking about various pockets participating. One bombed out space has been these new age themes. And a couple of stocks like Zomato are now at the high point of the day. Nykaa continues to see selling pressure. You can't paint all of them with one brush, but are some of these stocks looking good? If yes, which one of them would you prefer?
So I would not like to comment about the new age specific companies, but broadly, I personally feel that if you look at the global setup now, with the way inflation has peaked out, and going forward also, if you look at the whole agri-commodity prices or metals or even the housing prices in US, they have corrected quite a lot. So inflation has definitely peaked out. And if this is the last hike which we are seeing from Fed maybe in the next week, that also we don't know if that will be a pause or a hike. But I think if at all, that will be the last one. And that is what, the US markets have also started pricing in. We saw a very sharp rally yesterday. So all the, even the companies are reporting fairly good numbers. If you look at, Meta and a couple of other companies, they have reported fantastic numbers. So maybe, some sort of interest may come back into these, significantly corrected new age companies. But I would say that, apart from that, there is a lot of value in other small and mid cap and new businesses, because these companies are still yet to make decent profit, whereas the overall market cap is still pretty high.
Ajay, thank you very much for joining in. That's the view coming in from Nuvama Asset Management. By the way, keep your eye on India Mart. The stock is up nearly 2% in trade, reports numbers, but along with that, the board is also going to be considering a bonus issue. So watch out for that stock. And another one is MRPL. Reported numbers a while back. At the bottom line, there is a big profit number of 1,900 crore rupees, which compares with a loss in the prior quarter. So the fall in crude prices is perhaps boosting the profitability of MRPL. Big jump in the profits of MRPL. Get into a break. On the other side, we'll get you a check on what dealing rooms are saying in our segment, D Street Chatter. We also get you a few BTST trading calls.
Welcome back. India Mart, that's come out with its set of numbers, and the EBITDA number has grown by close to around 15.5% or thereabouts. Remember, some of these stocks have come off big time from the top. Now, the management had told us in the last quarter that watch out for some margin compression for one more quarter, and then things will improve. That margin compression, I think, has taken place. It's come down to around 25% odd. Remember, from the mid-30s, it's come back closer to around 30, and now, in fact, for this quarter, it's come in at around 25% odd. What the street seems to be excited about, I think, is that the bonus that's been issued as well. So there's a corporate action that's taken place. For the time being, the stock is up close to around 3% as we speak. So the street says, okay, margins have compressed, but they expect margins to improve from here on, considering it as, now, in fact, the margins have based out after correcting a goodish bit. So let's see how this goes. But for the time being, it's up 3%. Do you mind anything else?
Well, actually, on the top line, the performance is good.
Yeah.
Quarter-on-quarter revenue growth is 6.9%. Year-on-year, it's up 33.5%. This is the third consecutive quarter where the company's revenue growth is in excess of 30% on a year-on-year basis. In fact, for the full year, consequently, FY23, the revenue growth is at 30.8%. Yes, the margins have been under pressure. For India Mart, margins used to be more than 50% during the COVID time because they generate a lot of their revenues via sales. So they have to put feet on the ground who will go out and sell and help you generate revenue. So during COVID, the feet on the ground was actually quite minimal. So they did a lot of savings. And since then, the company has been making investments. And those investments, that's the reason why margins for the company have been consistently coming down. But I guess, the street believes that the margin decline has now come to an end. And from here on, margins should start improving. At the bottom line, there is a decline of about 3% because of the decline that we've seen in margins. So revenue growth is very strong, but margins have fallen sequentially and on a year-on-year basis. There is, of course, that bonus issue as well to boot. So the stock has gained close to about 4.5%. But let's find out what Nimesh is hearing on this big rally that we're seeing in the markets. Nimesh, dealing rooms must be happy.
Oh yes, Rima, it's not only for for today's trade, but for this week itself. It's been a good week for the bulls and backed by institutional activity. I've been saying this for the last many days, and that's showing up in the FI numbers as well. Today, for a change, the FI data or the flow is very selective in the large cap names. But look at the broader markets. That's where the big action seems to be. And I guess one of the reasons is, for the last couple of days, we are breaking on the upside in terms of crucial resistance and moving higher, and that gives a lot of confidence to retail and HN investors. And that's playing up in the broader markets. That's the overall feedback. I guess the next level to watch on the Nifty would be 18,200. That's the next resistance, so to speak. So that's the level to watch. But I guess there is clearly momentum now in the mid cap and small cap, backed by HN activity as well. I guess May is going to be tricky from individual stock point of view. I'm saying this because the first half of the earnings was better than what Street was expecting. The fag end of the earnings is largely where you'll see a lot of a lot of question marks and a lot of bad numbers. So that's something to track as far as May is concerned. But historically, May has been a good month, compared to what normally the saying is, sell-in May and go away. Historically, May has been a positive month for global markets as well as for Indian markets. So let's see how May pans out. But for this week, it's been a good momentum and backed by institutional activity as well.
You know what I heard today? Someone said, forget sell in May, go away. Buy in May, don't shy away. So that's, the new thing that I heard today. Go ahead.
Right. Nimesh, you go ahead. You tell us, what are you picking up in terms of individual stocks?
So, Nigel, in terms of individual names, the first stock is Laurus Labs. Even after a disappointing quarter, that stock is up. In fact, up 6% on good volumes. And I believe the volumes are largely contributed from HNI investors. So some smart HNIs seems to have bought into today's weakness and hence a big move in that stock. So that's the first one. The second stock is Stovecraft. For the last 3-4 days, the delivery volumes are quite high on this particular stock. There is a chatter as well that there could be a clean out trade from a domestic mutual fund. One mutual fund seems to be churning a lot of mid-cap portfolio, and they own a large chunk. So it looks like that clean-out trade should happen very soon, and hence an uptake in that stock as well in today's trade. The third stock is ITD Cementation. Again, a mid-cap stock, buzzing in trade, good volumes. And that shows the kind of confidence which is coming back in a lot of the mid-cap names. And ITD is also moving up in today's trade on good volumes at HNIS. So that's the reason why that stock is buzzing. And the last stock is Axis Bank, something which the street seems to be talking too much now. So it's become a light of a consensus that there could be a large block coming in Axis Bank very soon. So post numbers, that stock is under pressure largely on that reason. If you look at the shareholding, one large private equity still owns 3% stake, and that supply overhang could be a reason why Axis Bank is under pressure today.
All right, lots of names, lots of moves. Thanks very much, Nimesh. Nimesh mentioned ITD. You look at a few other names. TCNS will come up on your screen. By the way, none of these are results reactions or anything of that sort. So ITD is up. TCNS is up. It's a clothing company. Branded apparel. Then we can pull up Texmaco Rail, which is up. It's okay. We can say it's that railway infrastructure theme. Ethos. That company is doing very well. Stovecraft is another one which is jumping up. There is HOEC, which is higher. Polyplex is up some 8% or so. And so many other names which are sort of joining in this broad move higher we are seeing in mid-caps, small caps, etc. Mitesh is with us to tell us what to buy or sell today for a reverse trade when we come back on Tuesday. Mitesh, hi, afternoon. What do you have?
Afternoon, Prashant. I have a BTST on LIC Housing Finance. That's moved up nicely and is crossing its short-term averages. So BTST with the stop below levels of 340.5 for targets of 350, 351. And LNT is the other one, which is closing at the day's high. It had a gap up opening, so good setup. They should see continuation. BTST here with the stop at 23.52 for targets of 23.90.
Thank you for that. Let's now shift our attention to the special segment, Earnings Corner. In this segment, we'll tell you what are the key earnings to track for the rest of this week, which basically ends tomorrow. To name a few, today Ultratech Cement, L&T Finance, M&M Finance will be reporting numbers today, and tomorrow the big number to track will be Kotak Mahindra Bank. You also have a few other banking names like RBL Bank. So let's find out what the street expectations are from M&M Finance. Abhishek is here with the details. Abhishek.
Well, Rima, there was already a business update which had come in, so in which they mentioned that for Q4, the business assets are up 27% YOY and about 7% sequentially. Disbursements, however, was down about 4 to 5% on a sequential basis. Collection efficiency, both month on month and for the quarter, has actually seen an improvement for the period ending March versus the previous period. And asset quality has improved. Gross NPA ratio is down to 4.6% when compared to 5.9% in the previous quarter. The key things to watch in the result will be that the net interest margin could be under pressure and can decline on a sequential basis given the fact that cost of funds for NBFCs are on a rising trend. AUM growth is expected at 27% YOY and about 6% sequentially as per Kotak Securities estimate, and provisions can increase on a sequential basis. We are working with an NII growth of 8.8% YOY and about 1.1% sequentially. Profit can be up about 4% YOY, but a decline of 0.6% sequentially. Back to you.
Okay, all right. Thanks very much for that. So that's M&M Financial. But let's stay with the banking space because Kotak will report numbers tomorrow. That's a biggie. Abhishek, back to you. What are you expecting?
Well, Prashant, to begin with, loan growth could be around 20% YOY and 4.7% sequentially as per Phillip Capital estimates. So the net interest margin as per Phillip Capital is expected to decline by 10 basis points. However, not to take it away from Kotak Bank, it will be at 5.37%, which is a pretty good number in itself. So you need to watch out for the low-cost deposit momentum and the overall deposit momentum because as Kotak Bank already has its CD ratio of credit deposit ratio of about 90% or thereabouts. So for the loan growth to take place, they need to have deposits also growing at the same pace. Asset quality to improve. Phillip Capital is expecting a 7 basis point improvement in gross NPA ratio, which may decline to 1.83% when compared to 1.9% in the previous quarter. And you need to watch out for the management commentary and their outlook going ahead. Our poll suggests NII growth of 28.7% YOY and about 3% sequentially. We are working with a profit growth of 7.5% YOY and about 6.5% sequentially. Back to you.
All right, and finally, Abhishek, tell us, what do we expect from IDFC First Bank's earnings?
To begin with, Nigel, it's expected to show a strong bottom line growth or PAT growth momentum for IDFC Bank as per our poll. So the loan growth traction could remain on the healthier side. 30% growth YOY and about 4% sequentially is what the analyst is working, and this will be driven by the retail and commercial finance. Traction in deposit and rise in cost of deposits will be seen closely. It's happening for all the lenders, all the banks, that the cost of deposit is rising rapidly. You need to check over there. Credit cost to remain stable and asset quality is expected to improve. The net interest margin can remain on the healthier side. 6.3% is the net interest margin that Motilal Oswal is working with. Our poll suggests NII growth of 30.2% YOY and about 5.8% sequentially. We are working with a profit growth of more than 97% YOY and close to 12% sequentially. Back to you.
Abhishek, thank you for that. Look at the market, guys. I mean, it's, it's a bazooka.
Unstoppable.
No other way to describe it. I was just describing, I was sort of saying that this looks like a melt up. And we were up 70 points then, 80 points. The market's up 160 points, and bulk of the gains has come in after exactly starting 3 p.m. I mean, bulk of the gains. And we started the show at 2:30. We were just under 18,000. And now we are almost 30 points away, 20 points away from 18,100. If you can just pull up these names, I think it'll tell you the bulk of the move has come from Reliance. Reliance is now single-handedly contributing about 30 points. I think the intraday will tell you if that is true or not, because what we have is the absolute contribution. Not so much, maybe a little bit. Incrementally is what we're interested in. ITC, maybe we can pull up.
Yes.
It's contributing 20 index points to the move on the Nifty. Again, the intraday will tell you what's happening. Yep, there you go. That's a big one.
ICICI Bank, just pull up that intraday of ICICI and HDFC Bank. That's where a lot of buying has come.
I think just pull up the Nifty Bank.
Yeah.
We were negative when we started off the show, mildly negative. We're up 270 points. Just the Nifty Bank should come up for you, which, bulk of it will be because of HDFC Bank as well as ICICI Bank. Just take a look at that. That's telling you the picture, right? The big one has woken up and said, I'm putting my hand up, let's get counted in here. And that's why the Nifty is dancing away to around that 18,100
and this is when the European markets are actually in the red. The CAC is down 0.75%. The FTSE is down about half or 0.3%. Yeah. If you have the European market rates, you would see they're in the red.
Someone was talking about the decouple again. No?
Yeah, in the morning.
This is, I would say this is just kind of, they say momentum begets momentum, right? I mean, you want to get on when something is doing very well. And that's the point we were discussing with Ajay earlier at Novama as well. So there's some serious action, even from the time that Nimesh was with us with the dealing room chatter. I mean, we are up 100 points from that level. So that's how dramatic the move has been, which has come through. The turnover is up on your screen as well. This is a sort of very good volume market in mid cap, small cap. So you can't push this away saying there's a low volume move or anything of that sort. It's not. Incredible. Let's just look at mid caps and small caps as well. Or this is just large caps. The small cap index was up 0.8. It's up a little bit more, 0.85 now. And I think the mid cap index was also up 0.6% or so. And I think it's up around that. So this is a Nifty, Bank Nifty, large cap move, which has come through very, very sharply. Right now. I think Sudeep will be with us. We have to take a quick commercial break here, but markets are the top story and the way they've moved in the last 20 minutes or so. Stay with us.
Welcome back. Wow, it's a fiery market, closer to around 18,100. But let's focus on a couple of stocks. And Sudeep Bandyopadhyay joins us on the show. Hi, Sudeep. It's a party on the Lal Street today. The Indian markets are surging, but one stock that's not participating is Godrej Consumer. The street doesn't like the fact that they've gone ahead and bought Raymond's FMCG business. But it's a high pedigree group. Corrected close to around 100 rupees in just 2-3 sessions. What's your view on the stock from here on? I mean, valuation-wise, it didn't look very, very expensive, given that they're talking about scaling up the margins. At around 900 rupees, are you interested?
Well, Nigel, I will be. I think market probably is reading a little too much into the consideration they paid for the consumer business of Raymond's. The way I look at it, I think Raymond probably has been looking for selling this portfolio for some time. They finally got the right fit and the right buyer. Godrej needed these kind of category of products in their basket. They didn't have, and probably this will enable us to enter a lot more outlets because this is a category which they were not even remotely close to. They also have a management bandwidth and management experience of handling products, having recruited the top management from HUL. The way I look at it, this deal should work very well for the Godrej Consumer in the long run. Raymond was never really focused on developing this brand, but in spite of that, they were generating a decent revenue from these. I would say they were kind of the stepmotherly treatment at Raymond's. Now with GCPL taking over these brands, I'm sure they will really try to ramp up the business from these brands. And reasonably confident that GCPL at current level definitely looks good. And in hindsight, I think all of us will say they didn't pay too much.
Okay, got that. So bullish on GCPL's acquisition of Raymond Consumer Care, and you believe the company will be able to extract that value, improve the margins, and perhaps improve on the revenue growth as well. Because despite, as you said, maybe not the top focus, the revenue growth of the consumer care business for Raymond was still in, I think mid-teens kind of a revenue growth is what they've clocked in. Sudeep, are you convinced that Laurus Labs has perhaps bottomed out?
I'm not sure, Rima. I think the way the company share price has moved over the last a few months or quarters, it's really halved. And there are conflicting views as to whether they have bottomed out or not. There was some excitement post the numbers, and but I will wait and watch. I don't think I will start recommending or buying into Laurus Lab at the current levels. Considering that it has corrected, just that because it has corrected, I won't get there.
Just because it corrected, it won't go there. Any individual picks, one or two names, ideas? It's a market of stocks, Sudeep. So broader, within a sector, it's not as if everything moves. There's one name which moves, and fair bit of rotation as well. What do you like?
Well, I think some of the IT pack, I think a little bit of contrarian view, but IT has been beaten down to a great extent, particularly the frontline IT. And I believe, it's not right to write off IT in this manner. Whether we look at, an Infosys or a TCS, sticking to the frontline IT companies, I think there is definitely merit in acquiring these IT companies at current levels with a 1-year kind of time horizon. The other sector I will definitely point out is consumer product companies which are focused on rural India. And the two names which come to my mind having the largest share of business coming from rural India are HUL and Dabur. I think both these companies probably will turn out with a much better volume growth story in the near future as and when rural demand picks up. And that will be contingent upon the monsoon being good. So if an aggressive investor is willing to bet on the monsoon, I think HUL and Dabur will be a good bet.
Okay. All right, Sudeep, we'll leave it there for now. Have a good extended weekend. Thank you very much for joining us. And it's a pleasure, as always, having you with us here on CNBC-TV18. Well, the market's up 160 points. And, now, of course, there's a bit of moderation. It looked like we'd go all the way to 18,100 in this push higher. It perhaps will fall short by 30-40 points. But the game changed. Starting 3 p.m. on the Nifty, the index added 100 points. The Bank Nifty added 300 points from 3 to 3:30, or maybe 3 p.m. to the hype after that. 100 and 300 respectively on those two indices. So banks and the non-bank stock, which did sort of contributed heavily, is ITC incrementally, and then Reliance, of course, on an overall absolute basis, did very well. But you also had other help from companies like Nestle, etc. Nestle on the day of the earnings release did not do very much, but after that, for the last 2 days, it's been performing. By the way, on absolute day-on-day returns, it's the top performing gainer on the Nifty. L&T, HDFC Life and Apollo Hospitals are the other gainers that we had on the index. So it's a super close, and the move continues. Rima.
Well, on the losing side, Axis Bank was the top drag, down 2.5%. The bottom line was impacted by the provisions in account of the Citi acquisition. Other than that, very few losers. You had Titan closing in the red, ONGC down a bit, Cipla down 0.7%. But there was no loser with a cut of more than 1%, except Axis Bank. Outside of the Nifty, that's where all the action was, because we had so many individual companies reporting numbers, whether it's PI Industries with its acquisition, or even Laurus Laboratories post the management conversation.
Well, that's right. Talking about stocks that move more than 1% from the broader markets, you had plenty. PI Industries locked up 10%. Remember, it's a large cap company out there that did very, very well. On the flip side, Godrej and Raymond, they got into a deal. It's positive for Raymond, but the stock had already run up enough. So that ended with a cut-off closure around 6%. Godrej Consumer Street believes they paid too much. So that's down closer around 4.5% odd. CSB Bank, big run, big outperformer. Unfortunately, the NIMs compressed more than expected. So that stock goes home with a cut of closer around 4.5%. Crumpton, well, it came in for selling yet again. So that one did see some selling. Voltas ends down only 1%. Remember, early morning it was down 5.5%. Though for the week itself, the stock still ends with a cut of around 6% or thereabouts. But it's recovered goodish bit. Voltas is what we're talking about. A couple of other notable movers. REC stock, technically as well is looking very, very good. PFC is the other stock that technically as well is looking quite good. And Syngene, one of the surprise good numbers that we saw, Rima. And that went home with a gain of another 4% today. So it was a party today. We have come off the high point of the day. The final tick is much lower, but I think on an average, we should end in this vicinity of around 18,050 because the volume spike was quite large at around 3:15
And quite surprising for day one of a new series. And ahead of a long weekend, but clearly the bias is on the upside. But some other mid-caps with phenomenal price and volume action. Edelweiss Financial locked in an upper circuit of close to about 20%. EIH up nearly 10%. On the banking side, smaller banks, Punjab and Sindh Bank, J&K Bank, rallying close to about 7-8%. Zomato, a good 6% up move coming through on Zomato. And this week itself, it's seen a rally of close to about 15%. Plenty of action, and the action is going to continue over the weekend as well, with names like Kotak Mahindra Bank and RBL Bank reporting numbers. But folks, enjoy your long weekend, because another one's not coming for a long time now. We're going to wrap up on Closing Bell from the entire team. Thank you for watching. Don't go anywhere. Our special offering on Friday, Smart Money, comes up next.